Good morning. Well, the 2 trillion's almost in the bank. The nut jobs over in the House supposedly have agreed, so should be there to be had. We all get our checks, right? 3 weeks, what we do with that, whatever. So the jobless claims report is out. I guess it was terrible and the market rallied. So I guess that's a good thing. And so just looking at the charts, which we do, no big deal. Yesterday, there was some whipsaws going on, and so far, things are kind of playing out the way I suggested they might in yesterday's commentary, of yesterday being a consolidation type of day, which we can see it is, small candle body. It popped up, went down. Today, so far, just an inside day. And that's actually a good thing, having some chopping around here at the top of this wide range bar. Oh, shoot. Sorry about that, Nick. Yeah. Dan and I were up there looking so good, I forgot to flip over the charts. All right, here we go. So, all right. So there's the wide range bar, S&P futures. The consolidation day yesterday, kind of like the whipsaw, came up near the top of this bar right there. And, it backed off. You can see here on the 60-minute chart, the rally and then the drop, and things have just been chopping around here. And this was the rally on the bad unemployment, jobless claims. So that's a good thing. However, maybe we're just going to continue to chop here. Here was the prior lows over here to the left and retested. The news comes out, so on and so forth. That being said, there's some work to do here because, and it may not, maybe it's I'm not so sure, but I look at the pattern and say, is this a beach day? Not that we're allowed on the beach here down in South Florida. We're not allowed on the beach. I guess we can look at it. But we've got this, upside shakeout kind of a pattern. Not really a head and shoulders, who cares about the textbook view of it, but this is what now we need to keep an eye on. So can it get above here and attack the prior high, which wouldn't be a real big deal based on the daily time frame, but intraday, it would be pretty good. So we'll see what happens. And well, today's Thursday, right? And Friday. And does anybody want to take it higher or lower, I guess, before the weekend? But part of our factory work, what I talked about yesterday, was, okay, here's the wide range bar. The factory work is, okay, consolidation at the top. That's a good thing. Dips into the 50% level or below should only be a tail, and the candle bodies should stay, up here. And it's doing that so far. So constructive pattern after creating this little breakdown failure and the move up. So choppy price action. Right? That's the short view of looking at all these patterns and the explanation of it. And we pretty much got that in most of the markets, but we'll take a look at them, of course. And I think, even some dips down here, even if it breaks here, it opens up the door to, dropping, obviously, because now you've created, everyone's created this distribution pattern up here, as we see it on the 60-minute chart. But if it does dip down, what we want to see, and it's kind of, where is that going to be? Because here's the wide range bar. There isn't much of any support below here. So that's where it brings in the concept of, if it can create support, if it drops and then spring back up again, where we get another bottoming tail bar, more evidence of buyers stepping up on the dip. So right now, there's this uncertainty. Is it really going to be the tradable low? You hear people saying on CNBC, is it the low, right? And anyone with a brain, I guess, or, to say, wouldn't jump into that trap and would say, hey, possibly, maybe it's retested, so on and so forth. We'll see in the future, but it's a good start and all of that. And then we just see how it all develops here. So this is a good start coming off of this low, and some kind of retesting and some sideways price action is really the ideal to get away from this stuff over here a bit. Not really a 1, 2, 3, Alex. I mean, it does sort of meet that definition of the wide range bar and the inside bar, but the ideal type of 1, 2, 3 comes after, you know, a move through resistance, not into a mess over here. So I wouldn't think it goes that far, you know. So you look over to the left here, and there's all these little points. So I mean, from an intraday trading point of view, you know, maybe it goes up to the high. We have to play within this area for the moment and see how this all develops. So I would not look at this and say, hey, I'm really interested with this pattern as a swing trader looking, you know, out, you know, several days. A retest of this, some kind of retest, a little more sideways price action would be ideal to a bigger move. Okay. So NQs, similar here. Actually, this is the NASDAQ was underperforming yesterday. I played a little catch up, came back in. And so you've got the reaction here to the resistance area. It's holding here. So we're in a choppy consolidation for now. So more of this probably to come. I'd be really surprised to see this take out yesterday's high. It would be an unusual pattern, with a bottoming type of pattern. But this is a really good start where prices broke down under these lows. It springs back up again with a wide range momentum bar. It's consolidating here. And absolutely, Tony, it's a short-term bottom building. So you're asking a question, but that is a fact. And when I say that at the point of view of a fact, meaning a fact means it's not a belief. It's black and white. It is absolutely true. But the other question that builds on our thought process is, how significant of a bottom is it? And we say, well, it's a good start. It's not where it's a larger bottom that's occurred over, say, 2 or 3 weeks that has much larger implications. So yes, you answered the right. Is it short-term bottom building? Absolutely, yes. So with that in mind, we see how much more can it build. And what we like to see is it comes up into resistance, is sideways price action, what we call absorbing supply. And that's what's going on. Yesterday, it hit resistance, came in, but there wasn't any major damage done. So now, you know, it dips down, it comes back up again. And yeah, I think, you know, if the president's right and everything opens up on Easter, all of us that typically aren't in church, maybe we'll just get up to the front door and say, thank you very much. And the crowd that's in there, let them enjoy. As someone that spent many years as a child forced in church, I've had mine left in a lifetime, but it's all good. So same story there in the YM, you know, wide range bar up, consolidation, you know, so again, repeating good start, but there's the jobless claim rally, and that's a good thing. You know, bad news market rallies, it's a good thing. Russell, same story. Actually, the better pattern as far as building a short-term bottom, where you've got multiple days here going sideways versus the obvious dip down below and spring back up again, but still doing the heavy lifting here and chopping sideways. Oil, just kind of dead in the water, right? Dead in the water, sideways here, choppy sideways. And you see pivot low, pivot high. When you see a picture like this where you've got swing highs and swing lows relatively close to each other, well, you're either a day trading scalper or you're just staying away from it. Right? Probably better to stay away from it. Waiting to see more evidence of it's ready to go one way or another, which would be clearing the most recent pivot highs or clearing the most recent pivot lows. And bonds. You want to know about Nugget? We'll take a look at Nugget. Just looking, lost the volume. VIX is still dropping. I'm just reading comments here. What do you think of Tilray? Tilray needs a little of its own medicine, I suppose, to get that to lift off the ground. 300 to what was the low, around $3. Anyway, so T-bonds consolidating at the top of the wide range bar at resistance, right? For the moment, bullish price action at resistance, which says, hey, this is going to keep going up. What does that say about the market? If yields are going to keep going down, well, maybe the Fed's buying treasuries. Maybe that's what it's supposed to do, drive interest rates lower. But at some point, we need to see those interest rates start to perk up a bit. So we'll see how it all plays out, which is, part of, these, we looked at these yield curves back here at the beginning of the year where we talked about, I showed all of you the market internal gauges, sentiment and breadth were deteriorating. And these very short-term yield curves were getting inverted. And that was, when my comment was somebody's going to get hurt here. And obviously many did. And so now this is all a good thing with everything that's happening here. And is recession avoidable? We'll all find out, I guess, in the next few months. All right. Gold. Massive move off of the low after a giant move to the downside. So big volatility. It's up at resistance. The longer it can stay up here and go sideways, that's a positive. And just going out to the monthly charts, other than that whipsaw, they look like they're heading higher. So with all this stimulus and thinking, inflation, which is exactly what the Fed wants, to not have deflation, yes, this could be heading up toward 2000 over time. So that's a good monthly bar, and we're close to the end of the month where you got this dip and a bottoming tail bar, which says, hey, there's a lot of buyers just lurking below looking to get in, and they did. And so that's institutions all jumping on board at the same time, looking for this to go higher. So bullish price action in gold and silver, obviously big laggard, but playing a little catch up here where the momentum slowed and, it's moving up and coming up to, kind of hard as far as the resistance goes because it fell so hard. And that's the power of the void, where prices drop sharply and then the movement over time. And now it starts the way up and had its blast off, and now it's chopping around. It's, pretty much in this area right here. And it's creating pivot highs and pivot lows, and which way is it going to go? So at this point, if it clears $15, it'll go higher. And if it clears down in this area, whatever it is here, around 14 and a quarter or so, give or take, it'll drop. And maybe dropping, after a move like this to make a higher low or a retest would seem pretty normal to me. Let me just get through here quick so Dan can review. Transports, doing the right thing, coming off of the low here. We want to see them participate. Russell, we already looked at the futures, but, they come down to 2016 low, right? Look to the left, right? No fib lines, no Gann lines, no Elliott waves. Just look over to the left of your chart, proprietary. Maybe, hey, Dan, maybe we should sell this proprietary knowledge of looking to the left. Oh, I gave it away. Qs.
Well, it's a special look.
Okay. Consolidation here and 182.3. So kind of like where it left off the day after a dip down to 179, dipping down and coming back up again. No, so no Elliott waves, but hey, we can create an Elliott wave course, and from there we'll sell the advanced Elliott wave course, to read the waves in the waves. Spiders, all right, same story, dip down to 140-ish, breaking the low, coming back up again. So far, bullish price action, building up a little support level. So that was the overnight dip. Right, here's the overnight dip down to support. All right, so now we magically turn what was resistance into support with the flip of a switch. And diamonds, same story there. All right, so there it is. Probably today, choppy action, and let's see how it all plays out over the next several hours here. So let's not be the frog in the blender here today, and let the consolidation play out a little bit here. All right, all yours, Dan. How about gold? I went over gold. Oliver had a big move up and up at resistance here, so chopping around too.
Yep, there it is. Yeah, the broader markets here, I did not like that sell-off yesterday. I knew there was news, and now it's just a 50% retracement from the low to that. Made a new low on the unemployment numbers. I knew were going to be shocking. I mean, who didn't? And it went lower. But I'm honestly extremely surprised we negated this gap on those numbers. So yeah, I agree with Greg. Let's not get chopped up, but that's a very good start. I was thinking we were going to have to be playing more damage control here with our put spreads, but no, I think we're fine. Let's go through them. Apple, we did one. I mean, our entry was perfect. I mean, look right there on that bar. We sold an out of the money put spread. And it's only for tomorrow, the 235s. So, good so far. We're okay. AMD, we've been short way out of the money, $36 puts. Looks like those are going to expire at full profit. Boeing, we have a 80-60 put spread. Relative strength. Look at this. This gapped up in a weak market, went sideways, red bar ignored. That's a nice continuation pattern right there. Look at that. That is a beauty. It would have been more of a no-brainer if it didn't have so much resistance right here. But that's bullish price action right there. That's what we call a bear sandwich. Wide range green, and the meat in the middle. So we have a put spread for tomorrow. Looks like we're going to make full profit on that. CCL, the cruise ships were perking yesterday, and their cruise ships and airlines are going to be still tied to this bill that Congress is screwing around with, because it's we're making a bailout play here, not just technicals. But we sold that for next week, the $10, $5. Looks fine. IWM, we did a put spread yesterday, as well as a directional for our swing trader. And we, at the dead high, that we did a perfect, Greg, right at 1 p.m. Well, it did it right here. It did make a new high, but right on these tails, right after MT Live, I legged us into a debit spread. Sold the 116s for tomorrow to lower our cost basis. JP Morgan, we did a put spread, kind of like Apple. We, did it beautifully, and it's fine. Expires tomorrow. I've been very selective on which ones to go out the next week on. Space 10.7 expires tomorrow. That looks like full profit. Uber, $13 naked puts. What do you think the odds of this closing over $13 are by tomorrow? I would say 99.5%. So that looks fantastic. Just let it, you could probably close it out at a penny today if you want, which is fine. Or if the buying power doesn't bother you, just let it expire worthless. Cyber, we are long stock. DRI, short $15 puts. That was an amazing trade. Fleur, we bought the little 1, 2, 3 breakout yesterday. It was showing a little relative weakness yesterday, but it's totally fine. Hey, good morning, Arun, Debbie, etc. IWM, I mentioned. Hilton, we have a covered call. We're in profitable territory. MPC, a little oil stock we nibbled on yesterday. Starbucks, naked put, $40 naked put for tomorrow. Anyone think that's going to go under $40 by tomorrow? I sure don't. The old Shake Shack, long stock, stopped yesterday's low. SYF, we nibbled on an oversold banking stock. And finally, WTFC. That looks like an add over these highs. Looks great. So see all our positions, a few against us on the afternoon sell-off, but they expired tomorrow, so we just need that melting ice cube. Let's look at some gappers here now and other things. MJ, this is the marijuana ETF. Greg, I mentioned to you, if we want to give it another nibble attempt, but it's not a great pattern. And I heard one of you asking about Tilray. I have Tilray on my long watch. I like the volume spikes here. I like the retest. I like the pre-market action. I like it. So that's going to be one of my beat up bottoming plays. We've been doing really good on these beat up bottoming trades. This I like a lot. Breakdown failure. It's close to a 180 reversal. And then it's kind of a reverse head and shoulders. And now it's gapping up over it. So that's a beautiful gapper right there. Let me put him here, CNDT. I'm just guessing these little guys that are perking. I'm just guessing they're Corona related. RWT, look at this beautiful gap. It's now, but it's running too much. 5. But it still has room. $18 down to 3. Steve, CGC. That one's a little stronger because it moved more off the low. So there's really no good entry. So remember, we've been talking about playing catch up. I actually like Tilray better as a catch up play because you're closer to support and you got your retest. PAR, yep, another bottoming thing over the high, yesterday's high. Full, I think, had earnings. I can't tell where you're gapping. CSIQ had earnings, 1750. The gap's too big. That's a solar stock, so I always like looking at the cousins. Here's Fizzler. No pattern. TAN is the ETF. No pattern. A cake, I read. This is, cheesecake restaurants been getting beat up. I read that they, after March this month, they're not going to be paying their landlords. Wow. And, when I saw this thing happening and retail getting beat up, stores shut, like these guys don't have any money to pay rent and expenses and employees and this and that. I know, but just in terms of other industries getting hurt, the REITs. Thanks, Robert. You're a funny boy. So, you just use common sense, you all, and just think about the flow of money in business and who's going to get affected and hurt. So, REITs that hold that rent to these stores are going to get beat up. Now, I know most REITs are big malls and things like that. And, you know, as opposed to private investors, maybe renting to a strip mall, you know what I mean. My dad in Texas owns part interest in a bunch of buildings, and a week ago we got a letter from the manager preparing us for downturns and bankruptcies and non-payment of rents. And I'm like, yep, I was expecting this. And I wrote him back saying, yep, thanks for your honesty. I mean, you're going to be in the business, and you just gotta deal with reality. I kind of do some some loan sharking loans. I got 4 real estate loans out here in Broward County, and I think I'm in the process of taking a deed in lieu on one of them. But I read in today's paper that I think it was the governor as opposed to just mayor. I think the governor of Florida is putting a moratorium on evictions. All right, let's see what you all got for me. McDonald's, that's why I love McDonald's. ENPH for McGraw. ENPH, I don't see a pattern, so I'm not sure what you want to do with that. Said G, that one's closer to support, so I think that one's okay for a put spread. You're saying, well, no, Gustavo, you're in a totally different situation, and let me tell the others why. Because you live in a mobile home that you can just hook up to a truck and move so they can't find you. That's what you told me, right? You said when you see the tow truck coming to tow you away, you can just drive off. All right, somebody on YouTube asked about RCO. We shorted puts on it yesterday, the way out of the monies. Actually, I said you could do 22 or lower. And where did I come up with 22? Hello, it's what we teach. Right here, the low of this green bar is 22.77. So I forget which ones I sold, but I'm in it. In terms of a new trade for YouTube, there's nothing to do on for a new trade, nothing. It's up 5 bars, declining 20, gap fill. It's encouraging that it's above yesterday's close right now, but there's no trade right there. So my short puts, I'm holding them. Gee, I think you mean you received, you didn't pay. McDonald's, why did I have this here? Oh, they were in the news too. No pattern. They were saying they're going to cut down on their menu. WOR. I don't know why. That might have been earnings. Yeah, WOR was earnings. So was Titan. That's a big mess. SIG had earnings. Here we go. Here we go. Oh, man. Okay, so McGraw earnings. It's going to be spready, but in the first 5 minutes, let's come back to this for maybe a put spread. I will put him in a window on my other computer. SIG. Hey, Alex, Greg told me he's going to buy me a new 6-monitor computer for my birthday. GPMT, gap's too big. Let's watch it in the gap fill. VIOT, I think that had earnings. I don't know, there's better. MU earnings, hey, 30-minute high. I know it's up a lot, but the gap over yesterday's red bar bottoming tail